You're listening to the Alternative Investor Mastermind, where we do a deep dive on alternative investment opportunities and the lifestyle it can create. Join Jack Krupey as he presents actionable tips and tricks in doing passive real estate away from mainstream strategies. Go beyond the usual fix and flips and try less explored yet rewarding investing ventures. From multifamily properties, mobile homes to Bitcoin mining. Do not miss this opportunity to escape traditional assets and finally create wealth without Wall Street. Now your host, Jack.
Welcome, everyone, to the very first show, very first podcast for the Alternative Investor Mastermind. Really excited about this. This is something that we've been talking about doing for a long time. I have a lot of conversations with investors, friends, business partners about the type of investing we're doing, both real estate, which is my full-time role and job in investments, but also some of the more off the beaten path investments. I know a lot of people into cryptocurrency, oil and gas, investments into pre-IPO companies. And the goal of this podcast is to really bring those conversations and the types of masterminding that we've been doing with our network to the rest of our entire community. And for our first show, I think it's only fitting that my first guest is William Bonati, who's my partner in the JKAM Funds and longtime friend. So, William, welcome to the show.
Hey, awesome. Thanks, Jack. Great to be here.
Absolutely. So, while we're introducing ourselves to the audience, many may know us, but hopefully we have a whole new base of listeners too. So why don't you, if you could, just give us some of your background and specifically from the lens of sort of how you how your investment path has went and how you started to become familiar with more alternative investment strategies.
Yeah, absolutely. So, going like way back to when I was a kid, I was always, I guess, trying to do side hustles to earn money. When I was a kid, I was like obsessed with dirt bikes. And dirt bikes are expensive, right? So my parents were like, well, you want a dirt bike, figure out a way to save money and buy one. So, from the very early on, I was always hustling to try to figure out ways to earn money. So raking, doing yard work, landscaping. My mom owned a salon, so I would, wash all the laundry or the towels for the salon and, make like $1 a load. But I would have a spreadsheet on how many loads I needed to do to get to, to whatever amount of money it was needed at the time to buy a dirt bike. So, that's been me from a very, relatively young age. And I went to college and got a degree in finance and business. And, at that time, I was really interested in becoming a financial advisor because, I felt like I could, guide people and help people create wealth and financial independence, and then also have, make a decent living myself doing that. But, after being a financial advisor for, nearly 6 years, I found that, the products and services, the planning and advisory services weren't truly going to help people become financially independent or wealthy. And then on top of that was the structure or model of compensation, as a financial advisor wasn't going to lead me and my family to financial independence either. So, I was getting really burnt out with that and really pretty unhappy. And I was living in Miami at the time, and, we were at a friend's house, a get together, just hanging out. I think it was like a barbecue or something. And I ran into a guy that was about my age, and he had built a portfolio of 20 single family rentals, and super happy. He had a bunch of time. He had a lot of flexibility with his schedule. And I honestly didn't think he was like really sharp or smart or driven, any more driven than anyone else. And he had accomplished this. At that time it was 2012. So you could buy, a single family rental in some of the suburbs around Miami for between $65,000 and $100,000, 3-bedroom, 2-bath. But nonetheless, he had to raise money to do that. And I was like, well, geez, if this guy can do it, so can I. So pretty much from that point on, I had, dug in really quickly into learning how to invest in real estate. I found a coach or a mentor to show me the recipe. And at that time it was wholesaling, because I had done some research on bigger pockets on different investing strategies and how to get started. And as many of you know, or maybe you don't know, but wholesaling, you don't necessarily need to have a lot of capital, a big capital outlay to do that. So I quit the advisory business and ran my first campaign of postcards to absentee owners, and sure enough, like, it just blew my mind. I literally made more money in the first 3 months of doing that than I had made in an entire year previously as a financial advisor. And so from that point, it was just sort of a progression of, okay, so I was wholesaling, and then, opportunities to flip and rehab houses came about. And then eventually I ended up learning about non-performing loans. And that's obviously where you and I connected, started doing that. And now, now I think what we're doing right now is, I want to share this with as many people as possible, because, the path to true wealth isn't going to come from your job's 401k, or your financial advisor, your CPA, or your attorney, or really any of these advisors that are traditionally the people we seek advice from. The path to creating wealth will come from taking control of your own financial house. And with the amount of resources and technology available today, this is a lot easier than many think.
Yeah, absolutely. And we have a pretty similar path. I got into real estate right out of college, somewhat by necessity, because the dot-com crisis. And fortunately, I had a job, but it wasn't quite the way it was a few years before, where you had your pick of jobs and could fly almost anywhere in the world to take a job almost anywhere. And, say 1998, 1999, by 2001, we were right in the middle of the dot-com crash, but right at really the beginning of the first real estate wave. You mentioned that wholesaling. I had a similar experience with advertising, and something I find myself, preaching regularly, but occasionally I have to remind myself as well, is spending money, not hesitating to spend money on marketing. We sent out probably 1,000 postcards to absentee owner landlords. And I think the mailing cost $700. We were printing them on our own printers. I think we hired a college intern or a high school intern, somebody to print labels and manually stamp them all and mail them ourselves. And we might have spent $684 on the mailing, and made six figures on it. Found a number of landlords who own multiple properties that were willing to sell them either cheap or even give owner financing terms. So it's amazing what marketing can do. And now I know we're both going through this progression of figuring out the social media, the internet advertising side of things, which is a new world for, I'm starting to feel old, because it's certainly a new world compared to what I remembered back in the day. And that actually reminds me of another segue, and something you've had success in, where it's probably one of the only areas I've lost money on the internet business side of things that I know you dabbled in. So it's something I think the audience would love to hear. Yeah,
I did that for a side hustle, so to speak, for a little while as well, Emma. So I was in New York. This was 2014, 2015, was investing in non-performing loans, trying to, get my message out to as many people as possible, my network and beyond. And during that process of researching, like, how to, marketing and all that, I found out about, search engine optimization, and, kind of went down the rabbit hole of learning about that business. And it was like really fascinating to me, because, I hadn't thought about it, as a user of the internet, I hadn't really thought about every way that it's monetized, right? So it turns out that you can create real estate online as well. And so, without getting too into the weeds on it, I was like, okay, well, I hired a coach or a mentor for the SEO business, and learned that. And I was building what are called lead gen sites. So, for example, I researched super niche service-oriented businesses in, markets with populations of, say, 100,000 or more. And I found piano moving to be one of those higher ticket service businesses where, a lead for a piano move is worth, say, more than, something with a where the service is maybe like 20 or 30 bucks. If you move a piano, it's a couple $100 to, could be $1,000 if it's a grand piano and you're moving it and you're storing it. So long story short is I built a website, a piano moving website, pretending to be a local piano mover. And at this time it was in Bucks County, Pennsylvania. Got that site ranking for piano movers, the search term piano movers. For that local area, it was ranking #1 in Google in the first 90 days. I started getting phone calls asking for quotes to move my piano. And as soon as I got that first phone call, I called the 3 piano movers in that market. And the first piano mover, I said, hey, do you want, I have this person who wants their piano moved. Do you want this lead? And they said no. For lack of better words, he basically told me to F off. And then I called the second guy and he's like, maybe. And then I called the third piano moving company. He was like, absolutely, send me all those leads. I would love to take them. And that started the relationship where I just rented exclusively all the leads for that website to this local piano mover. He was paying like $550, $600 a month. And I literally had created this website. Probably took me 2 weeks to make the website, and 90 days to get it ranked. And so that was just like another one of those businesses where it's just unbelievable, sort of the commerce and upside potential of that and creating real, online real estate assets. So
that's amazing. And so, I didn't have the same level of success. I did, we had one of the things when we met early on is at least the same thesis on digital real estate and being able to take advantage of these online businesses. For me, it was really all about execution, but I did test the waters. And that's one of the things that, we're going to continue to communicate on this podcast is things that we've dabbled in that if they go well, we share them with our friends, our family, our network of investors. And if they don't go well, I still share them with friends, family, network, investors. Yeah. I've never been hesitant to talk about things I've tried that haven't worked out as well, and seek help and guidance beforehand and even during to try to make them go well. And majority of things I've done, I've worked out pretty well, and it's enjoyable.
Yeah, why don't you give us some more color on your background? I mean, you said that you were wholesaling initially there, and then what happened?
Yeah, so out of school, I was in Rochester still. I grew up in New Jersey, but went to college at RIT in Rochester, New York, and got into real estate shortly after college there. My landlord owned about 20 houses and was a real estate broker and helped me get into the business pretty quickly. This was 2001, 2002, so it was the early part of the first real estate boom, and mortgages were plentiful. It was pretty easy to qualify for a loan, and I had a decent W-2 job and solid income for a 22-year-old. So within a year, I bought 3 houses. Within 2 years, I bought another 5 or 6 and quit my full-time job, got my real estate license, and was really built a property management business, and had a good run going in Rochester. After the 2007, 2008 crisis, things just sort of froze, and I wanted to get back closer to New York. I'd always wanted to live in the city, and luckily, a private equity fund buying non-performing mortgages needed real estate people. It was kind of a new industry, and they needed people who were doing short sales, wholesales, buying REOs. They needed people that actually knew that side of the business to work on the banking and the fund side, just to make sure they knew what to do with these tens of thousands of non-performing mortgages that they were taking over. So it was a great business. I was on Wall Street in November of 2008 and really got in at the very early stage, and went from one fund to partnering with a small family office to partnering with a larger private equity fund. And we ended up buying $3 billion worth of loans. So it was a pretty crazy ride. Exciting most of the time. At the same time, I learned a lot about myself and really, the type of role I want as a business owner. And, sometimes at that level of scale and that level of corporateness, it's not as, the grass isn't always as greener, when you're dealing with 30,000 plus loans. So was fortunate to make a deal and actually get bought out of that firm. And with the liquidity I had, I really was trying to figure out what to do, with that money. And I'd been investing in some syndication deals myself already, just living in New York and not being allowed to do the same business I was already a part of full time. I found multifamily syndications and really like that asset class. As someone who owned a bunch of single family, 2-family houses, I know how hard that is to scale, and really how, if you're not careful, you create yourself a job. It's really difficult to manage large portfolios. Now, granted, Blackstone is doing it now, Cerberus, some of the big funds, but they're at such a scale. They've got hundreds of employees. So yeah, and I also moved to Puerto Rico, for those who don't know. So we're going to have some episodes talking about tax savings and tax advantages of living down here, and how to structure your life in a way that you can build wealth without Wall Street, and have a portfolio of unique, interesting investment opportunities. I have a few theses on this, but I'm just curious to ask you, what are your thoughts on why these types of alternative investments perform better than, say, stocks and bonds and more traditional Wall Street assets?
Because they're not driven by quarterly earnings reports. I don't know. They're non-public, right? So, it used to be, I've heard you say this a bunch of times, it used to be, the country club deals, the power of your network and who you know. And, a lot of that's changed with the Jobs Act, the 2020 Jobs Act, where really anyone could start a Reg D 506C fund and raise money for alternative investments like real estate. So that's really opened the market to doing a lot more of this type of alternative investing, or making it a little bit more available to, the average accredited investor who's, or even non-accredited. I think those funds are available as well, but people that don't have those networks of, country club relationships or whatever it may be. So that's changed it a lot. To answer your question specifically, why do these alternative investments perform better? I think, it's a matter of, right, so there's the perceived risk, right? So a lot of times the perception is that, alternative assets are risky. And so it requires a higher yield. They're not as liquid. Stocks and bonds, or stocks generally perform, over long-term averages are, say, 7%, but after fees is probably 5%, versus the stuff that we're investing in, multifamily syndications is, mid to high teens and 20s, but it's significantly less risky than stocks are. So I don't have a good answer for you there, Jack. I don't know. I don't fully understand personally why these alternative assets often provide significantly higher returns, but more people aren't doing it. I think in general, it's just a perception of risk, right? Like, so most financial advisors are going to say that alternative assets like multifamily syndications are really risky, and they're going to recommend that you don't do that because they have a conflict of interest or they have a lack of knowledge. And it's generally a combination of both, in that they don't get compensated when they refer away to alternative asset type stuff, and they also don't understand it, right? So because they're not personally participating in it, and I can speak to that from experience.
Yeah, no, I think that's a perfect answer. I think you really hit the nail on the head. And this is, I guess, a relatively new industry. It's really been 10 years since the Jobs Act came out, and where you could actually, advertise publicly for these types of private placement syndication deals. It's still opened, at least a majority of the deals we're involved in are only open to accredited investors, those that make either $200,000 a year, or if married, $300,000 a year, and have $1 million net worth. So there's a bit of a barrier to entry. But yeah, it's really, I think it's knowledge and access. And, the only thing that you mentioned, liquidity, is the only thing that's maybe a benefit potentially on the public market sides. Mm-hmm. And with liquidity, it opens up institutional capital in some cases. Many of our deals are too small for a traditional Wall Street firm. A multifamily building of 200 units that they're raising $8 million. The average private equity fund doesn't look at deals below $20 million. So It's, to me, a perfect niche of deals that are too big for the small guys and too small for the big guys. And that's always an area that I've had success. And I think that's that blue ocean strategy where most investors want to try to be in as much as possible.
Yeah.
So, we both, it's funny, we shared so much in common with, with interest in the internet side of things, how we got into the real estate business, and, even our current paths of trying to, have a lifestyle type of, a great business, but one that's also not corporate and not tied to things. What are some of your financial goals over the next few years, as far as just like generating passive wealth and growing your family's wealth?
That's a good question. I think in general, from a high level, I want to be, my wife and I, we want to be doubling our net worth every 5 years. I think that's certainly very doable based on our savings rate and investment rate and the returns that we're getting out of alternative assets. With the goal of that being, as the network doubles, so does the passive income part of it. So that, at some point in the next 15 to 20 years, the transition from, working full time to, ultimately being completely passive is a really easy transition. I mean, I haven't penciled down or put anything on paper as like a long-term strategy, but high level, that's, sort of what we're working towards. So.
Great. And I know you and I have both talked to so many investors over the last few years. For those that are still kind of stuck in the traditional, stocks, bonds, mutual funds, like what do you have any advice for people that, have kind of the assets and net worth, but are just not, haven't quite gotten over the hump into, what I'm assuming we both feel are superior types of investment opportunities? What would you say to them?
I mean, knowledge is power. I think both you and I could attest to, like, once we learned about these opportunities and started participating in them, there's really no going back, right? Like we wouldn't go sit at a meeting with a financial advisor and let them tell us what to do with our assets. I mean, that's just not going to happen. But recognizing that not everyone is like us and not everyone has the time to devote to learning the business and learning about all the different opportunities, there still is sort of this personal responsibility that you have to like take the time and ownership of taking control of your financial house, right? So the amount of resources that are available to you now to learn about alternative investing is unbelievable. We're probably one of 5,000 podcasts in the real estate space. So, I mean, I guess I would just say take some time to learn about the other opportunities and be open-minded to that. And then one of the challenges with, for example, like my wife, she's a physician, she's really busy with her practice, and then she's really busy with family when she comes home. So recognizing that, higher earning professionals have limited amount of time, you could do a limited amount of research or spend a limited amount of time on improving your knowledge on alternative investments, and then figure out what's of interest to you, and then partner with the experts in whatever niche that is, right? So, maybe Jack, you can speak to how we're doing it, in that, we're not the full-time operator or boots on the ground, but we have the knowledge and ability to look at deals, underwrite them, vet them, and then participate in them. I mean, do you want to speak to that anymore? Or
Yeah, absolutely. When I was bought out of my old firm and I had to figure out where we were positioning this business, the thought of trying to recreate a business from scratch, competing against operators that in many cases have been doing this 20 years was daunting. And frankly, it's not where my skill set was. I've always been a connector and a networking machine and putting things together and partnering. So it really didn't make sense for me to try to compete with people that frankly I'd already, been investing my own money with. Why do I want to start a competitor? There's a way to work together. And, what I found and we found is, these operators that are best in class, because this is not a Wall Street type of opportunity, they always need to help raising capital. And in many cases, it's within 30 to 45 days. So we found that we could actually partner with groups that I have a ton of respect for, that I felt were best in class. And, by partnering with them, we actually get better returns for our fund than, say, a normal partner or a smaller partner who's maybe investing $50,000 gets. So we built this business around providing value to both the operating partners who are doing, they're the quarterbacks of the deals that, in many cases spend hundreds of thousands of dollars and maybe 6 months to a year of time just to find 2 or 3 good deals a year. And on top of that, for those passive investors who are too busy with their, busy with their jobs, busy with their families, that they don't have the time to dedicate to researching and vetting operating partners, we can plug in and provide them both our expertise on the vetting, but also diversification. The average investor is not spreading millions of dollars across 50 multifamily deals. They may have a few $100,000 allocation, that they're going to put into these alternatives. So, I think it's much better for them to be diversified and partnering with groups like us. And, someone, just a little bit about myself and my personality. I'm just endlessly curious about different opportunities. Like I said, I dabbled a little bit with my own personal money and the website side of things. That's one of the few that just didn't go as well for me. But because I have friends that have high W-2 income, I've spent the last year or two researching oil and gas and certain other carbon capture opportunities that have significant tax advantages that actually work better for high W-2 earners, like doctors, like just very successful business owners, that in some cases are better than real estate, at least from the tax side. Risk side remains to be seen. Right now, as we record this, oil prices are very high at the moment. We're in the middle of that Russia-Ukraine conflict. So, I guess the point is, and I think what I want to do with this show is just continue to highlight interesting opportunities, interesting guests in really all of the alternative niches. In the coming weeks, we're going to have a number of real estate people on, because that's one of our core focuses. But we're also going to have people that are experts on blockchain. We're going to have oil and gas. We're going to have a partner I've invested with on probably 6 or 7 deals now that lends money to companies, either that are small public companies or companies about to go public. Mm-hmm. And they convert at basically a significant discount to the IPO price. So these are all really fun opportunities, and I'm really hoping that our base of listeners really enjoys just the exposure to these types of deals. And we're going to try to have some fun as well. One of our upcoming guests is also a points and miles connoisseur like me. So if you own a business and you generate a fair amount of expenses, one of the fun things to do is use your Amex or your Chase points and travel the world in first class for free. So we're going to talk about the lifestyle as well. And Willem, I know you like to hunt, you like to travel, you like to eat good food. Yeah. So it's important to have some fun as well.
Yeah, absolutely. Yeah, super excited about hearing about or sharing a lot of these alternative investment strategies. Some of the big challenges that hiring professionals have is the time aspect of digging into these opportunities, and then also the knowledge part. Being able to be knowledgeable enough to be comfortable with it. So hoping to sort of expedite some of that for you guys, or give you guys some ideas on things that you should be looking at.
That's great. That's great. Well, I think we're probably close to wrapping this up. Why don't you just give the audience your contact information with JKAM? And, I know I have a number of investors I've talked to. You've got your own base of investors as well. I encourage everyone to reach out to you both on the investment side, and if there's any requests, suggestions on the podcast, future content, please don't hesitate to reach out to either of us. But William, why don't you just provide the website and contact info as well?
Yes, you can find us at jkamalternativeinvestments.com, and you can reach out to me specifically at Bonati, that's B as in boy, ONATI, at jkassetmanagement.com. Yeah, you can get me there. I'm pretty flexible to chat with anybody. Oh, and I'm in Vail, Colorado. So any listeners are out here in this area want to connect, ski some local lines or some local spots on the river for fly fishing, just let me know.
That's great. That's great. And we have a dedicated page for the Alternative Investor Mastermind on the JKAM website, but you can always reach JKAM at jkaminvestments.com. And my personal email is jkrupey at JKAM or jkassetmanagement.com. And folks, thank you so much for joining. And William, thanks for being the first guest. You've been a great friend and business partner over the years. So looking forward to having some fun with this and also providing a lot of value and content to our audience. So thanks for being here.
Absolutely.
That's all for this episode of Alternative Investor Mastermind. Now that you know the many alternative opportunities out there all up for the taking, you can finally become ultra connected and ultra wealthy. Get more valuable advice from the experts by subscribing to the show at alternativeinvestormastermind.com. Become a winner in the world of passive investing today in alternative investment strategies. Thank you for joining us. Until next time.